Good morning, everyone. Good morning. Happy Friday, and welcome back to these sessions. And today we're going to be here with Dan. Welcome, Dan, again. It's been a while, but glad to have you back.
I'm happy to be back, Fabio. We have stopped a bit with the session, so many things going on, and hopefully everyone is well. So we're back. And before we start with all the other exciting stuff we told you about the basics of options and developing and growing with monthly Q, we're in the middle of earnings season, so this is kind of a Friday special for earnings.
Yeah, and before I pass it on to you, Dan, I want to just make a small intro on some of the earnings that we saw in the past couple of days. So what you see here is, of course, next week is going to be a very, very interesting week because we have the big tech companies reporting with Microsoft, Apple, Meta. We already saw Google and Tesla reporting this week. So we're going to go into some maybe nice insight there. But again, next week is going to be very, very important, not only for the tech companies, but also for the market, right? So we're going to have, and also NVIDIA is coming up. So understanding what's going on with earnings is going to be key. And today we're going to show you some of the things that you can use within MentorQ to kind of also prepare for it. So before I'll pass it on to you, Dan, I just want to show some example of the latest earnings. So I think the first one is really, really interesting. We sent an email yesterday. It's Chipotle. So Chipotle yesterday was down 14-15%, really bad beat on the earnings side. But again, how can you prepare for this sort of outcome? And can the option market, can the models help you understand what's going on? So if we go back a couple of days, so we go back to the 23rd, which is the day before earnings. What you see here immediately as you open up the screen, we were 2 days ago on the 23rd of July already in a negative gamma condition. So we of course know what that means. But then look at the Q score. So the Q score aims to give you an overview, like a very great snapshot of what's going on to the asset by looking at 4 different factors: option, momentum, volatility, and seasonality. So what this is telling me when you see this red here, that we were very bearish on the option side and we were very bearish on the momentum side. The volatility was still neutral, so not super high, not super low, and then we had no seasonality. If we then go here, we can kind of see negative gamma piling up here, and then we can also look at the matrix. So for example, on the 23rd, we saw an increase in negative gamma by 7.95 million here. And then, of course, we have delta as well. So the market was already preparing for the earnings. They were protecting themselves. Maybe they were scared that Chipotle could have done bad earnings. And then what's really interesting is here, which we sent in a message yesterday, the Q score was actually really positive until a few days before. And then we suddenly dropped. So the option activity went super bearish in a matter of a couple of days, right? So you can actually understand that, hey, the market is really scared and is really worried about what's going on with Chipotle and the earnings coming up. So as you can see, we were from a very, very bullish option score, which we saw here, the uptrend coming in, and then we kind of started seeing the downtrend here. And then, of course, we dropped this big candle here during earnings. Well, actually, we saw a massive drop after. But basically, this could have been an early warning of hey, what's going on there? The market is really pricing in. And then, of course, the skew was also very put bias. So what this represents is that the market is willing to pay higher premium for out-of-the-money puts versus out-of-the-money calls. So again, they do that if they think that there could be a significant drop in price, right? Fast forward 2 days, and then we can also look at the levels. Right, we obviously saw big drop in price right here, of course, and now we're kind of stalling at this level. But essentially, now we can also understand, what's going on here. We're at the bottom. We're very bearish on the option side, very bearish on the momentum side. And as you can see here, there's a very big put support level at this 45 area. So if we open up the indicator here, we can see like these big levels right there, right? So this put support is going to be very important, and we can come back here. And next week, we're going to spend some time talking about gamma levels. But as you can see, this is very, very important areas where the market is really worried about. There's going to be a lot of hedging activity going on there. Yeah. Let me know, Dan, if you have anything to add there.
No, it's exactly what I would have said, and this is also what I mainly do. Is you can't prepare for everything, especially if you go directional. Oh yeah, that's wonderful that we hear with Google. You go on, Fabio, with Google, and as I played Google, and we can replay what I did there in our Discord, and I will let you know some thoughts I had, and but Fabio, you go on, you tell the people and show them what you saw, and I will say what I saw and how one can do things better, or what was good or bad.
Yeah, and I want to share maybe the example of Google. Then I want to maybe spend a few minutes on Tesla just to show how we can also read the market on Tesla. But basically, Google the same. We can go back in time, pre-earnings. We saw that we were kind of very bullish on the option side, very bullish on the momentum side. We had a slightly negative seasonality. And of course, indecision in terms of volatility. We were at the neutral position here. But at the same time, you can also look at the net gamma exposure chart. There was a big 200 level core resistance. We can also go back and see our Google chart here. And as you can see, like we almost went through this core resistance level, and then the price drop, and now it's kind of like stalling around this weekly expiration. If we go back to the chart, we can also see here how important these levels are for our weekly expiration there. And then, well, this one was, of course, 2 days ago, so we would need to go back to get the updated levels. But again, here we can look at the option score. So we can see, for example, when we went from very bearish a few weeks ago, a few months ago, actually, and then we went to very bullish here, then we started seeing like kind of like an increase in the trend. So always follow this big move from bearish to bullish, because this is where the big money is flowing in. This is where the big option activity is coming. And then, of course, here, if we look at the skew, we were also very on the call bias side. So the market was willing to pay higher premium for out of the money calls than they were for out of the money puts. So this is another good sentiment indicator that you guys can use. And of course, you also have our swing level. So again, this can support you as your lower and upper level for the next 5 days. So we can look at that into more details. But before I pass it on to you on Google, I want to share some insight on Tesla, right? So Tesla did bad earnings. If we go back 2 days ago, the market was very bullish on Tesla, so we were really high. Of course, the earnings are catalysts, so anything can happen during earnings. The market can position ahead of earnings, but of course, the results are going to be the ones that dictate the narrative. So here, what we see that before the earnings, the market was really kind of on the bullish side. And then if we now go back to today, we can see basically how things have changed. So now we are in a very, very bearish environment from Tesla. We can see how we are now piling up at this 300 level. But I think what's also very interesting is that if we look at the price of Tesla and we have our swing levels there, they could also have provided a great support yesterday. So these 300 areas was kind of like a pinning level for the day. So we tried to break down and we didn't break, and now we are kind of like above this 300 area. So again, going back, we are seeing an increase in bearish activity coming from the option market, but we do have a strong put support level at this 300 area. So again, all this data can kind of support you and show you what's going on. So we saw the option activity going very bearish, and now we are so monitor these changes, because again, everything could change in a matter of days. And yeah, and I'll pass it back to you, Dan.
Yeah, thanks, Fabio. I will try to share my screen. So we're gonna do a bit still of recap, because with the MenTQ data, it's not only about basically learning how to set up new trades, but the most important thing is how to manage a trade. And I will try to go into the Discord at some point. Give me a second. I hope everyone is seeing my screen. I'm going to open that now. Get back to Google. We go. When people mix up, there are two Googles, and you always should go for the one which is more, has more liquidity. So if we go back, Google had earnings, if I'm not wrong, 2 days ago. So if we go back, seasonality slightly negative. We had some high opinion and basically high momentum. I was AFK, so didn't have the time to put on very complex things. Kept it mostly simple. So the first thing was for me to, as always, check the 5-day swing model to know where we might end up. So the easiest trade here was and would have been, and okay, the risk return isn't that high there, but still the win rate is high. So setting up a trade, we can go over to the Discord soon, is placing their spread. And this is what I did. So in the pre-market, Google was dipping hard, but still it was far, far away from that level. And today this spread will close for a 100% win. But still, this is something very easy to do. But this is, if you don't have time and you really want to play earnings, the easiest way is to do this maybe a bit before power hour or even in the power hour. Why? And this is important. Everyone who has been following the sessions here, we've been talking about implied volatility and Vega. So in the last hours, there's the IV rush. Like it goes up, it goes up, it goes up, and sometimes we see even big moves in the last couple of minutes. So it's good to place your trades in the end. Yes, slippage can be there. Things become more greedy, but if you sell premium, and this was a directional trade I was talking about, if you sell premium, I will open the trade so you can see this. If you sell premium, then the best thing you can do is basically wait to get the most out of it. So don't rush, don't feel too pushed to do that. It's different if you want to go into basically, we'll talk about strategies where things are moving when we look at the earnings of next week. So give me Spirit. Let me see where is Google, and I will move into the Google area soon. Give me a second. Okay. Okay, I will start sharing my screen just for a second. So you see here various, I hope everyone is seeing that, various trades on Google I put up. So we had a call calendar, a put calendar. We talked about a bit about calendars. They have their charm, and then I will tell you when you can put up calendar, but some things can't be properly valued. So the max gain is, no one is really valuing it right, because it's not possible, because you have two legs and different expirations. But let's go back to the easiest thing here. I put up a trade here. You see on the 182.5, 180. And why did I do that? Let's go back to this tab. I did it because of that. You see? So this was an easy trade. This was an easy winner. Another one which wasn't that nice is IBM. We will talk about IBM and how you can manage these stuff, what you can do. But I want to go back to Google. So why did I put on a bullish trade? Normally I go non-directional, and this is what I did with my calendars. I went for a volatility crush, non-directional volatility crush with a little tilt, either to the bearish, either to the bullish side. So the thing is, just by looking here, you get a good feeling where is the market. So as Fabio suggested, you should look at these things. And yes, we were seeing here a change in the DAX. We're seeing a change in the GAX. So overall, still, this is pretty bullish here. We keep things just simple. So yes, I knew the overall put support is at 165, but I knew that the high volatility level close to my break-even point, and the high volatility level is the regime changer. So we have a fat acceleration if this had been breached. I knew the put support would have been the next level to maybe hold the move. So I would have had chances there to manage this trade. So in order to get a good risk on return, I used the high volatility level and what the model gave me. And yes, the risk was risking out of $2.50 spread and making $50, making basically $5. In the end, it's 125, which is not the best. I prefer other things. That's why I put often on. I have these broken wing butterflies if I go directional. So you get a tiny credit if you're lucky, or a small debit, but you can make a lot. And the risk return is 1-to-1, 2-to-1. But a lot of people find it too complex. So this is the easiest thing if you go here. Another thing which I checked, and everyone who has been following me knows that I'm not obsessed, but I love DAX. I want to see what market makers are up to. And let me just give you my interpretation of this before the earnings. This is not this is basically levels play a role, but not in the moment of the earnings event. Mostly they can play a role, but not like if their earnings are bad or super good, the algos will kick in and they won't respect that. So market makers will start accelerating the move or hedging there. So a lot of things can happen. But I knew the positioning of the market here was bullish in general. But the thing was, if you look at the DAX profile here in the orange line, was that there was also some hedging on the top, which gave me two things. I knew for a fact that if earnings didn't turn out super sour, we was probably going to move up, which we did, but we won't go to the moon, which didn't happen. That's why I put on calendars, which are so easy to put on, and they're good. You can manage them properly if you don't have a big breach. We will talk about a big breach soon, so you can learn something about managing calendars. But yes, and I looked at the swing levels, and again, the swing levels gave me some confidence that basically you had a swing level on the 22nd here, 82.44. You see, this is what I used for my break-even point, and I had some swing levels lower, but a lot on the upside, so I knew move wouldn't be that big. So this calendar trade, it's a very cheap trade to make good money. But this is the nice thing. We will start with the basic of options. So everything we've talked about, we will go into more depth from the coming sessions, and you will learn to use, by reading monthly Q data, to be able to use the right strategy. So if you look in the Discord, you will see other people posting their earnings trades there, and you can see how they choose their approach and how confident they are. Some people even trade strangles, short volatility trades with strangles, which, yes, it's manageable if the stock doesn't like skyrockets 20-30%. And if you're a beginner, don't do it. If you know what you're doing, do it, because you can manage it afterwards. But basically, if you use monthly Q data, and this is a good thing. Fabio, any questions? Let me take a peek if there are questions. Otherwise, I would go to another trade which went a bit sour, which I managed, and yes, basically a trade which we can take a look at. So let me
no
see.
questions so far, Dan. So for now, I think we can go. We can move to IBM.
Okay, so we had, if you see some monthly Q, like what I normally do is call broken wing butterflies or put broken wing butterflies. You see the Google thing here is 100%, but you see this here. This looks like terrible. This looks terrible because like IBM, so we go back here. IBM, I use, will be very open to you because I've been doing earnings for a long time. I use a lot of data on earnings, a lot of studies, and I filter things out, and I have brought some things with me, and I fine-tune it, refine the things in the end with ManTheQ, but you don't need to do that. Maybe I do things too complicated. I've seen people very successful. So if we go back to the 23rd here, so I'm sharing again IBM. You see, if we looked at Google, we had a better feeling overall. We're still in positive gamma condition. IBM, this old giant, has been going up under the new CEO. But yeah, some things were changing. And where were the warnings? The warnings were here. You could see the change in DAX and GAG. So you would see the market positioning themselves not bearish. This is the market doesn't tilt before the earnings. It's just hedges. They're positioning, and market makers, if some levels are breached, like basically here, the put support on 270, the one I used, basically then it sells down. It just goes down, and we can see this. I will try to let me get this here. Give me a second, IBM. I will try to get into my I will try to get into my okay, camera swing levels. Yep, momentum. I'm gonna 1 second go. I have to go leave the browser and present my trading view if possible. Let me see. Yep, I hope. Can everyone see my trading view? I think everyone can see my trading view now. So what happened we had earnings here. So let's forget about the extended hours. Let's go into what happened here. Go to 15 minutes. Oh, this is what happened. Basically, from the beginning of, we dipped off. And we dipped off hard, and we went back to this nice 60 level. This didn't happen right away. If we go in here, you see that this didn't happen right away. We dipped here, we went back up. So I wrote in the Discord, take the 60 level, which we have more here, because these are new levels, not the levels we had 2 days ago, but the 60 level is here. So I said, okay, I left my long leg. I had a thread, left my long leg grow and go deeper into the money, because I knew market makers would sell. I closed the short leg for a loss. I sold again the 60 and I waited. And again, here I sold down here. And basically, when I saw that we were going up, levels, like I said, were a bit different, but we reclaimed some significant levels. I closed the long, so the loss was nearly offset. And yeah.
Dan, sorry, I think we lost your screen. Sorry.
Oh, okay. 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 I'm very sorry. I don't know why this happened. It didn't show me anything. Okay, let's go on.
All right.
I hope everyone sees my screen again. So with these levels, they're not the levels from today, but you can manage even losers. You can manage even losers because my break-even point was somewhere around here with all these great support here, but we lost that right away. So this is like the worst trade which can happen because it's a spread. You can just let it expire worthless because you know you are at full loss, but you don't need to be at full loss. And because earnings are tricky events, we will teach you in the coming sessions how to manage that. I just wanted to show you that because some of the people followed the trade, and you can, even from a bad looking trade, which is closing in 2 days from expiration, you can do a lot of things. You can really turn that around if you know what the levels are. And this is a great thing. You don't need to do it right away. Yes, Theta is burning on some things, but Vega is doing its thing because it's burning down. So you have the intraday levels. You have the intraday levels, and one thing everyone has forgotten. I know Patrick is talking about it, is the Fibonacci. I'm not a TA guy. I don't use a lot of TA, but I use this. I still keep it. I don't know, Fabio, if you still if this still is maintained or used and from other people, but I still have it there. I'm happy about it. It's the only TA level, a TA thing I have, and I do use it just to get a good view. So basically, if you had managed the trade here, and we will show you how to do this with these things live. And on the coming sessions, you will feel good, even if you see your trade dipping hard. Okay, so basically, I want to talk not only about the past. The past is the past. We can't change the past. I think, Fabio, we should go on to, because we have now left roughly, maybe what I've prepared, start showing ideas for next week. I've put together some things, and we can see what we can do with the data I've brought with me, and basically on which trades mainly you should focus. And maybe back to you, Fabio, if there are any questions or remarks from your side.
Yeah, no, exactly. So I think there's no question right now in the audience, and we can go into this for sure. Again, this is not, guys, a recommendation. This is really just showing how
No, just showing,
and basically how you can get some ideas on how you can use the platform, the data. And then at the end, we're going to show you some of the events that we have for next week. So stay tuned there. And yeah, then I think we can keep going.
Yes. So basically, the easiest thing is you don't need to have all the data I have here. You can use an NI to do this for you, and I will show you some other aspects I use in ManthQ next to all these obvious stuff, the options flow you should use to take a peek, because like Fabio said, you see a negative DAX, basically change in IBM, and was AFK. So I put on this trade just by looking at the 5-day swing model, but I didn't look at all the other things which ManthQ provides, because I just was on my mobile phone, which is not advised. And if I had looked at the other stuff and the flow ManthQ provides plus other things, I might have set up another trade. But I had 3 trades. I managed the one well. So in the end, 3 winners, 2 easy winners, like I'm sitting there, and 1 winner which wasn't that good. So what I've brought with me, we have a lot of companies reporting next week, and 2 things should be said, because I always look at 2 things mainly when I trade options. This is the theta burn and implied volatility. So if you set up trades, beware of these two things. So if you have a short volatility trade, which means you take advantage that on the event, the day of the event, let's take Apple here, till the 31st, option prices will inflate. How much? There are models, there are things, we don't need to deep dive into that. It's not important for you right now, is basically that this will inflate. But what do we see here? And these are things you can even just grab together with an AI companion. What you can't get is monthly use data to put things into perspective. So I always suggest for earnings trades to trade with layers. So I've put in together some things just to give you ideas, and this is no recommendation. A lot of times models are wrong because the market just sees something which it doesn't like. And so you need to be able to manage these trades. Earnings trades are interesting because they are one of the few remaining parts of options where retail traders still might see an edge, and because the market can just position itself, and you, by having monthly Q data, you can take full advantage of that. And for all the other stuff, you need to heavily rely on your understanding of options plus using the monthly Q data, right? But for earnings, you can really make a lot of money in a very short time, because time is money, and that's why we talk about that. That's why a lot of people are interested here. So if we just take a look at this, what I brought with you, the first thing is you see 3 money bags there. What does this mean? Basically, that Amazon, Meta, and Comcast are three companies that normally the volatility collapses. So if we go back a couple of sentences, I said till the earnings date of the 31st, or respectively the 30th here for Meta, volatility will go higher from what it is now. So if you were buying a straddle, you might make money. Doesn't mean so. It's not always happen because that theta is working against you, but normally these are short volatility trades. What do I mean with that? That you sell strategies that the trade, the move, the implied move, what the market price is in, and this, please check this live before you take a trade, might be below that. But the implied move here you see for Amazon, for example, is 5.83. The average move is this. So this means we have, these are not the exact numbers. This comes from more data sources and even longer looks at earnings, that implied volatility crushes. Why does that help? Because if you sell high premium, just the IV crush will help you offset price movements. So this is a very simple way of playing that. So how could you play that? You could play that with iron condors, butterflies. These are short strategies, or you can go back into monthly Q, and we will do this in a couple of minutes to choose a right strategy. You can go directional, yes, with a swing model, or just take a look what monthly Q shows you. But this is something here I brought for you here, and I can share some of that stuff in the Discord. If you know, just as a have it in the back of your mind when you start doing your due diligence and maybe what to trade. This is just some idea that these stocks might move a bit less than the applied move. So these are trades you can do with calendars and other stuff. Okay, so I will pick out Amazon and Meta and Apple. We will start with these two, and we should take a look what monthly Q is telling us about them. So here we have Meta and we have Amazon. These are the two big ones, and I think it makes sense to pretend that the earnings are tomorrow, and that basically we would be setting up a trade for them. So how would we do that? What would be the play? We know just from what I showed you that basically these stocks move normally less than the implied. And this has changed because, for example, Meta was one of my best earnings trades of all times. basically just like risking, I don't know, a contract 2K making 6K on the contract. So if you had like 10, 20 contracts, you were waking up in a big smile. But this doesn't happen every day, and things have changed. Microsoft has stabilized. This doesn't mean that this will happen. So what is the first thing we see here? The first thing we see here, positive gamma condition. This is nice because this means market makers in this regime keep things calm. We like calm, but we still like that the premium are going up and we can sell premium most probably. Seasonality is even good. This might help. So this tilts a bit to the bullish side. Momentum is high. So we need to see where is the momentum. Is it positive, so bullish, or is it negative? When opinion is high. So these things tilt to a bullish trade. If earnings were tomorrow, what do we see here? We see a bit less green than Google. And this is important. If you set up, for example, if we had earnings on Monday, you need to look at these expirations here. You need to take a look how are things looking in the GAX and the DAX. Do we see any changes? And yes, here everything looks positive, but for this expiration and for the following, we see a slight change here that the market is getting is a bit hedging, but you should always put it into perspective. That's why the matrix is what I love so much. I use it every day. I can't live without it anymore if I trade. You see here 42 million out of 29 billion. So the change is there, but you have to put these things into perspective. This is important. And here you have the levels. So if you feel, you know, that I told you there is a volatility crash and we have a lower move, what would be a good example of trading that? The easiest thing would be to take the expected move and maybe set up an iron condor there, or a butterfly centered around a bit higher than the vol level, and take these into consideration. That would be a very easy trade. If you're unsure, if you don't feel good managing basically options, 4-leg options, while the market might be wild, the other easy thing is what I showed you is on that day, look at where the market will be in 5 days. So you have 3 options here. If you read all the data bullish and you believe in the Ivy crush, you can go very close to the level, even at the money, and play the bullish card. I wouldn't buy a call because Theta will just burn and it will collapse. I most probably would sell some basically at the money or in the money bullish spread, or even a cheaper put broken condor. The other thing is you can place here around this lower band, you can place here a trade. It will be 1, 2, 3 risk free to make one, something like that right now, which is not that bad. The next thing is what we should look, how the market is seeing things right now. So if we place the trade, we see market is still more bullish than bearish. And then let's go down to my DAX. So DAX is really, really, really important, really nicely placed. It looks more bullish, so most probably if nothing bad happens, we should go up. But we should interpret that also that the market is positioned here to basically keep things calm. And what do we see here? You have to see the things here. So everything which is below the spot price, now we going away a bit from earnings, so we go to the post event. Let's say you've put on a bullish trade, we can put on one afterwards, but what will the market do? It will move around, and if the earnings are normal, it either goes up a bit, it goes down a bit, and fade, and nothing bad or good will happen. So we stay in some range here. And then the levels kick in, and then the market makers will hedge or accelerate the move. So 700 level, that's a big support here. And these are magnets here, targets. These are targets here. If we go there above that, this is something, it's more the probability that it will hold after we have a move there is higher than it is. And we don't have a lot of targets here on the negative side. So this is good. So this gives you confidence, even if you say you go non-directional to tilt a bit bullish. The other thing I would check here before I take the trade is where are the swing levels? Do they align with my break even point? And the other thing is what we can do is basically, we take a look here and here a bit, take a look at the skew, what is happening. So we had a call bias, and by this here, you see that the market is preparing also for a potential downside move. If you have followed Meta the last 2-3 days, has been not moving that much, but basically it's not moving that fast and that strong as it has done before. And one last thing, what is the thing I would be definitely looking and maybe go down a couple of days, see how volume and open interest is changing. This is very, very interesting here. You see the open interest here? This is what is already there. And you should take a look at what is happening. The volume is what is rated right now, and you should see that the market is adding a bit here, but it is also adding here, which can be a bullish acceleration, but also a bit of hedging. And if you combine this with what I told you before, that Meta in the last couple of years normally stays in the implied range, you can pick your strikes for anything you want. Either you say you play the calendar or a double diagonal. So these are like an iron condor with different expiration wings and all that stuff. You can factor in all these nice levels Mantic gives you. And you can, if you go out in time, you can take out numbers here. You can very nicely find your supports here. And you can really put up nice trades you can manage. And one last thing before we go over to Amazon and then take a look at Apple is if you choose to play short volatility, most of these trades are normally the same week expiration because you want the full effect of Ivy Crush. If you take on more risk and you say, I know what I'm doing, and you play strangles or very wide butterflies, with 1-2 standard deviations or 3 times the credit you have received for the in the middle straddle, your wings are 3 times X out, then you should think of one thing. You should definitely think of one thing. How can I manage that? And there, Mantic really helps you because after the event happens, you should have a plan what to do. I showed you Google, which is a no-brainer. I didn't need to do anything. If you have a trade on which is basically the risk is already in the trade, like with a calendar spread, it's the whole debit. And just leave it to bleed out, but you can manage that. Or if you have a trade on like simple bull put spread, like we could put on here just by using the swing day model here, put a break-even point, and you will have, let's say you make $50 and you might lose 180 or you might lose 100, depending on the risk return your broker shows you on that day. The thing is, if you have something like that, then you already know your max loss, which is good. But if you don't want max loss, you should have a plan how to adjust. And this is what we will do in the next sessions to help you understand, to help you use Mantic data, and to avoid even if a trade goes bad. We will show even trades where you should just let go and redeploy. It doesn't help. Yes, you can roll forever. You can roll until eternity. But sometimes it's better to free up capital and to just see and find new opportunities on the screenage that Mantic provides. Are there any questions right now?
I think there's one question about Apple. So
yeah, we will can we take a look at Apple? Yeah, okay. So we can go over if we have the questions. We have the question live. Okay. Okay. So what do we see here? If we just take a look at Apple, we have a couple of days left, but let's say the trade would be now. We see opinion is very high. It's like Apple has made a return. It was really underperforming the V market and the taco trade, and the momentum is high. Volatility is neutral, which is okay, but it should elevate with earnings coming up. Seasonality is neutral, so we can't bet on that. So the first thing is we should take a look again at the metrics. So what do we see here? The total exposure. The GAX is positive. The DAX is changing. So you see a positioning on the other side. And for the closest expiration, we don't care because we know the trade is happening here. The expiration is basically before after this week, so before the 1st of August. So basically, this just gives us hints, but we don't care. But we can see these changes here because we see a drop in these levels. We see increase here, but we see a drop at the high volatility level, and the put support goes up, so things become tighter here. So these are the levels you should look. In general, the regime is still very green. This is something we can easily read from this condition here. So basically, yeah, the trade should be, if you want to have a bias, should be basically a relaxed spread. You can put a spread on here using the 205.64 as a break-even point, pretending the trade would be for tomorrow because earnings were happening today or before market open tomorrow. If you feel you can't manage that, but you want to take advantage of IV, you can even do basically a diagonal spread. So sell a 205 put here and buy 200 put 1, 2, 3, 4, 5 weeks out. Or if you believe, like I believe, that Apple won't move that much, you could build a calendar spread around that. And why calendar? And why call? And we will see if I'm right, because if we believe the market should stay in range, and we have here the risk trigger, so this is something to keep in mind for the break-even point of a calendar. You can, if you even believe you go higher, you could even sell the 210 and buy the 210 out for a calendar. This is the thing. If you believe the market tilts up a bit, then if you play time spread, it's good to position yourself a bit on the side the thing goes up.
yeah.
If you don't,
Again, this is
yeah,
not trading recommendation.
advice.
Yes.
No. This is just like ideas. I don't even know if I will take the trade. So this is just like things you can think about. This is just me doing due diligence by using MantheQ, basically data. Another thing you can do, I've said that a lot of times, is if you want to go non-directional, you can use the lower band and the risk trigger for placing the iron condor. So basically, this is something you can put on, and we have showed this in previous session. Please go back there and take a look. So from overall the things we have seen right now, we see that we will go into the DAX. Again, the same picture here. Market is edged on the upside, yes, but these are also targets. So this looks good. If Apple doesn't, most probably, if we're lucky, it's a nothing burger and we can just collect credit. If Apple just says, we have no idea what will happen with AI, yes, they might dip hard, but this is something we can't foresee. So be prepared for everything. So Another thing we should be looking at, and this is a bit different from the equity we looked before, you see here we go more to the call bias. And how can you interpret that? And then we will go over to another feature, and the Q and few people use, and we will see if we can find something there. Basically, we see here a call bias, and this has shown basically that Apple is basically, like you have seen here, it went up when we went heavily into calls. Here, we were still down here, and after that, boom, we went up. Like if you had just looked at this here, the 200, you could have basically sold some credit here, or even if you were adventurous, just bought a long call, which I don't advise, maybe a debit spread here, and boom, you have nearly 15 points on Apple, which is a lot. This is like a big move. So you can use the longer 1 month and 3 month perspective, and let's go one last thing: open interest and volume chart, and you see this is what is here, and the market is adding here in the middle. So again, why is that? So this is aligns at least with what I've seen from past earnings, from what I've seen from the volatility crush, that normally Apple stays in range. Just keep this in mind for your due diligence. I can't tell you what you should trade, and I would never do that because I don't know. It's not my job, and I'm not a financial advisor. And I believe everyone should do their own diligence, but everyone has the right to have good data, and MantiQ provides this. So this is another nice one. You can see how things are in perspective, IV, and the open interest, how things are changing here. So please use this for your own discretion. So another thing we will do is basically we will go, I think it's hidden here. If I'm right, maybe I'm wrong. Yes, there we are. So unusual call option. Let me take a look. So let's see, maybe we will find Apple. This is a thing which I'll do. So nothing here to look at. So we don't get anything here. This doesn't mean anything bad. Unusual option activity. Yes, sorry, I just went to the calls. So let's see if we find Apple. So if there's nothing here, this means we don't have any weird moves out of us, which is good. So we can just use the basically MantiQ levels. But another thing is, please come back here the day before the event on the 30th. I think the event is on the 31st. Come back here to take a look to see what is happening here, because most probably the action will happen then, not now. Because you see here, you see other option, unusual option for trades which happened or are going to happen. Because we have, as you can see here, still a couple of days. Here is, I remember the Apple event is after market close. So please come back here and here to take a look to see what is happening, what is there, what maybe the models can't factor in yet, but the unusual options volume is tilting to. So if you see everything, you see a change in the open interest and the volume in the puts and far out of the money, plus unusual options activity for Apple here. This could be a sign that someone is at least hedging for a big move. So maybe you should rethink your thesis. This is all basically one can say about that stuff. So to wrap that up, basically MantiQ provides you with everything you have here, and we just did a very brief intro into that. We have done other sessions about earnings. Please be advised to go back there and check there how we talked about things, how earnings can happen, and Fabio showed some really nice back testing, how you can just like by using the 5-day swing model create your own basket of nice options you want to trade. And create this basket, trade it, and with the statistics there, you can sleep at night and nothing bad can happen if you just take basically trades which have the max loss already factored in. And if you want to trade advanced strategies and don't know how or have questions, please tag me in the Discord. And this is it's very alive there, and a lot of people are doing great stuff there. So you can use the place there, and we will add more content. And one last thing, and then I'm finished. I did a questionnaire there, and we read what you answered, and we heard you. So from the next sessions on, we're going to build even more than existing into-depth approach into options, and always using MentorQ and risk management as the highest standard of this and aim. And again, be advised, everything I said today, this is no advice to any trade. This is just ideas, data we have here. Please be able to put the puzzle together. Otherwise, don't trade. This is my best advice I can give you. If you don't know what you're doing, please don't do. But if you know, use the data right. And if you have questions, feel free to reach out anytime.
Yeah, and thank you, Dan. I think that this was awesome. And I just want to remind everyone that so one of the goals for us is to help you use the data and understand how you can leverage the platform. So we put together basically 3 sessions for everyone. So for those who are not part of our mailing list or do not have an account with us, just go to mentorq.com/free, create a free account, and you can join all these events that we do on a weekly basis. So for those based in Europe, we do have a morning session for you guys at 9 a.m. European time, where we basically look at the data, look at the levels. We also have a pre-market playbook Monday to Friday, 8 a.m. Eastern, and then we also have post-market deep dive at 2 p.m. to 3 p.m. with Patrick. So all these sessions can be accessed for free. Just create a free account. And then if you also then want to get access to our platform, then you can use the coupon code LIVE25. We have 25 coupons available for today. And basically you can go under mentorq.com/pricing, and you can access all the tools that Dan showed you today. But again, if you don't, if you just want to learn about it, just join our free session. We can answer questions live, and you are going to get access to traders with 20+ years experience. So it's a very good opportunity for you guys to actually learn on how to use the data and how to improve your training skills as well, which I think is great. So again, thank you, Dan. And we're going to spend more time on this in the next few sessions. But if you guys have any questions, please send us an email at info@mentorq.com. And then wish you guys an amazing weekend. And then next week, we're going to be packed with events. So stay tuned and join us on our lives.
Yeah, guys, trade safe and don't overtrade. Keep it simple.
Thank you, Dan. Have a good weekend.
Yep, you too. Bye. Love you. Bye-bye.